There is no lasting success where there is not persistence, simplicity, and truth. And that is exactly what we focus on here every day with our charts. We focus on the simplicity of our charts. They work. They work day in and day out. We focus persistently on looking for the truth. And where is truth in what we do? It is in these charts, and it is in price movement. It is not in the news. It is not in the illusion or delusion that other people want you to believe to sell you ads or wherever they're going. The beautiful thing about price is it's pure and it's true, and these charts show you what is actually going on in the marketplace. It's not guesswork. It's what's actually happened historically, and we can use those patterns to decipher where things are going in the future. That's what we do here, and it's not difficult. It takes 10 to 15 minutes a day. It may mean many days, many weeks, many months, even years to master this, but look at the opportunity you have. Instead of focusing on the work, let's focus on the fact that we have an opportunity in today's world not to have to be insiders in New York, on Wall Street, at one of the big trading firms to see what's going on. Used to, you had to literally look at a ticker tape that would come through a machine, and you would have to try to read it and see what they wanted you to see and what was moving. Instead, now we can watch minute by minute what is actually happening before our eyes. And we can trade electronically in seconds. It is an amazing opportunity, and I encourage you to spend the 10 to 15 minutes a day it will take you every day, day in and day out. Commit yourself to it now for the rest of your life. How long will it take you to master this? I don't know, but when you master it, you got it. You've got it. You've got the potential for unlimited wealth. It's all dependent on you, and it takes one thing: your time, your focus, your energy. Each and every day the market's open. That's what we're here for. I encourage you, join us every day. We're going to jump into these markets and talk all about it. By the way, all of our Patreon supporters, we are having our call in tomorrow, 12:30 Eastern Daylight Time. If you're a new Patreon supporter, welcome. We will enjoy having you. We'll be going through your questions. Patreon members, go ahead and email me your questions, cw@chartingwealth.com tonight, if you haven't already. Also want to hear from you the stocks you want me to review in the next few days on a special videotape presentation too. If you've not purchased our book, folks, it's available in the notes. Please go ahead and do that. Let's jump into these charts. Bit of an up day on the S&P 500 and the Qs, but look at the candles. What are we seeing? Well, we've lost a little bit of downward energy on the price percent oscillator, derivative oscillator, still gaining downward momentum. We still have a down candle. Price, of course, is exceeding where it was in the prior week on both the wick and the candle body itself. Price movement still well below the weekly trend line. We see the S&P 500 bounced up 2.17% for the day. We go from the weekly to the 2-day. What's it telling us? Well, we can see that it's lost some of its downward momentum, pulled back a bit, still have a long spike down there. We do have a bit of a wick on top. Again, that's showing us some weakness, as we see, of course, for the down move. We see the derivative oscillators lost some energy, still have a red down candle, and of course, that latest the prior candle finished forming on Friday. This latest candle represents the movement on Monday and Tuesday. So again, price percent oscillator still heading down, derivative oscillator still negative. We go to that 4-hour chart, what do we see? Crossed over, going up in the afternoon. Price is still below the 2-day, well below the weekly. We'll continue to watch and see what we see in this regards. We still have down movement on the weekly and the 2-day. We do have that crossover going up. Those of you who missed out on a down move, keep your eye, of course, on the 4-hour chart. If and when it crosses back over going down, it'll give you a jumping in point and an entry point to move into more down movement. Now, remember, we jumped into this, that was Tuesday afternoon of last week, somewhere jumping in point. Again, it's a little difficult on the Heiken Ashi candlesticks, but somewhere around the opening at 183.07, and of course still $4, a little more than $4 below that when it closed today. No, let's see, it closed at 280.53, so about $3 below that, so a little more. So anyway, we'll continue to keep our eye on things, and we'll see what tomorrow holds. Again, as long as our 2-day and our weekly chart continues strong down, keep a close eye on the 4-hour. And again, we suspect that the movement down will continue. If it does not, and if it does retract fully, then of course we've got another $3 before we engage in any concerns about losses if the movement down doesn't continue. Can you take profits now? Could you have taken profits this afternoon? Of course you could. You can always do that, particularly when the 4-hour chart crosses back over. However, what has our experience taught us? Typically, when you have something as strong as a weekly vertical crossover going down, it typically continues for several weeks, particularly when that weekly vertical crossover occurs, as it did with the derivative oscillator crossing at the same time. So we'll continue to observe, see what we see. If things get substantially weak, then of course we'd want to pull out before we lost all of those gains. But remember, I hesitate to use the word lost. You don't have a gain until you pull the trigger to get out and take that gain. You don't have it until you earn it. So again, let's continue to watch, see what we see. What's going on with the Qs? Qs up also 2.82%. Still got a nice strong down candle for the week. We see that the Qs is going down even stronger still as far as that price percent oscillator goes. Derivative oscillator heading down on the weekly. Go to the 2-day. What do we see there? We of course see on the 2-day chart ended substantially lower than it was on Friday as far as the candle body goes. And of course the candlestick wick is much lower. Derivative oscillator losing downward momentum. Price percent oscillators pulled off just a little bit. We go from the 2-day to the 4-hour. And of course we see that 4-hour retracing going just above where it had dropped in the afternoon on the prior day on Monday. It hasn't recovered from even where it dropped on Monday morning. So again, we'll continue to watch, see what we see. Don't have a crossover going up yet on the Qs. We'll pay close attention. We've still got nice profit margins in there, even with this bit of a pullback, okay? And as we talk about over and over, remember, summertime trading zone. Remember, less volume. Remember, more hectic. This is the toughest time of year to trade. We've talked about that for weeks, months. Best time of the year to trade is fall-winter trading zone. Summer gets a little squishy, but typically we hit a summer low. Have we hit that summer low yet? Man, I hope not. I plan on doing lots of successful trades on the way down. We'll see. Charts will tell us what to do, my friends. Let's go from the 4-hour back to the weekly. What do we see going on with TLT? We've had a great run in TLT so far. If you remember, we had that jumping in point after we had the 2-day cross back over going up back on the 10th, Friday the 10th. We'll explore that a little more as we get closer. But what do we see going on? Well, we're into going into the 5th week of nice, strong up movement on bonds. Now, bonds were down for the day 1.14%. We see the derivative oscillators lost some energy. Price percent oscillator oscillators lost a little bit of energy. Derivative oscillators still heading up. Some reason I seem to get those mixed up when I'm explaining this, but that's what we had happen. What do we see on the 2-day chart? Latest 2-day candle reaching higher peak in the body and a higher peak on the wick. We see the derivative oscillator is just about flat. Price percent oscillators lost a little bit of energy. Now, what's that 4-hour chart doing? We saw things top at the end of the day on Monday. We have some downward movement taking place now, still well above the 2-day trend line. Our jumping in point was somewhere at the 126.65, no, the 126.65 mark. And again, we saw price at the end of the day, the close was at 1 130.93, something like that. Looking over to the left that you can't see, but 130.93. So again, still have a nice big profit cushion in there. We'll continue to keep our eye on things and see how things shape up on Wednesday, almost to go too far. But on Wednesday, we'll just continue to watch. Again, haven't violated the 2-day trend line, well above the weekly. Don't even have a crossover yet, but we'll watch. We'll see what there is to see, and we'll let these charts guide us. So again, still successful in all of those trades. Let's look at gold. Are we going to have a crossover on gold by the end of the week? I sure hope so. After a nice run down on gold, and then sideways for a while and started moving up nicely this week. Actually started moving up some last week, but up nicely this week. And we see gold still crossing over on the weekly. Now, we don't call that a weekly vertical crossover yet because the market hadn't closed on that candle. It will Friday at 4 p.m. We'll call it then if it happens. If we have down movement throughout the course of the week, and again, gold was up just barely for the day, 0.03%, it could pull it back through because you don't call a candle, you don't have a candle until that candle closes. And we see the derivative oscillator's gone positive, which is again a good sign so far. 2-day candle, of course, did finish today. Big green up candle, quite nice. Price percent oscillator spiking up, derivative oscillator gaining lots of upward momentum. 4-hour chart. Now we see things topping and sliding sideways somewhere. Gosh, it all seems to be right around that mark of 125.30, something like that. So keep your eye on things. Gold could trundle over and start heading down. It might just be catching its breath, getting ready to spike up a little further. We'll keep our eye on the prize, see what there is to see here. That's where we are as we end the day on Tuesday, go into Wednesday. Bit of a pullback in stocks, bit of a pullback in bonds. And we'll just, and again, stocks pull back from going down. Maybe we should call that a pull up and a pull down in bonds a little bit. But again, continue to watch, continue to observe these charts. Remember our rules, follow them. And I just ask you to stay with us 10 to 15 minutes a day. If you've not purchased our book, buy one. I have an autographed copy available for you. If you live overseas, then of course, we will send you one if you will email us. For some reason, Square doesn't allow us to clear your credit card from overseas. So email me. I'll send you an invoice. I invoice folks about twice a week. So if you've emailed me in the last day or so, I'll get you out an invoice tomorrow. And again, for all of our Patreon supporters, we have that monthly question and answer teleconference tomorrow, 12:30 Eastern Daylight Time. Going to be sending out that number again to you. Would love to have you join us. If you have any last minute questions, go ahead and email those, cw@chartingwealth.com. Thanks for being with us, my friends. We love to hear from you. We appreciate you appreciating what we do. All the best from the whole team here at Charting Wealth World Headquarters.